Commission wants to make it much easier to switch accounts, which they hope will mean better rates and services as banks actually compete for new custom. But could the demands for banks to hold greater cash reserves actually increase the charges the banks pass on to customers? Benjamin Cohen looks at the impact on the high street.
This report will have a big impact on the banking sector, but how will it affect all of us who, after all, every day in one way or another, have to use a bank?
By ring-fencing retail elements of the banks, the taxpayer will be protected from riskier investment decisions. Retail customers will also be the first to be able to withdraw their cash should the bank fail.
Banks are going to have to hold more reserves, more actual cash, and that's going to make banking less profitable for them. But the report says that this will likely see banks passing on the cost, possibly charging us to use their services, as is common in other countries. Loans and mortgages could become more expensive, or saving rates could go down. The hope is that these reforms mean we won't have to bail the banks out again, but most of us could feel the effects of higher bank charges in our pockets. Would you be prepared to pay higher bank fees if it meant the banks don't need to be bailed out in the future?
Absolutely not.
Why?
Because they make too much profit already, and they've caused so many problems for the country. I can't stand banks.
Yeah, I think so, because then that way, then they can avoid having to have the government bail them out. Instead, it's the customers that are paying.
Stop making bad investments. You make good investments, you make more money, we're all happy.
But the report also says that it should become easier to switch your bank, as easy, say, as switching your mobile phone network or energy provider. It might be possible to switch banks at the touch of a button. Right now, it's a pretty laborious process. The Commission says this will force banks to become more responsive, offering better deals to customers and maybe even lower charges.
Consumers have already been getting a worse deal over the last few years since the banking crisis set in. We've seen interest rates on savings accounts come down, we've seen interest rates on mortgages go up, and we don't expect to see a return to the good old days, but perhaps the status quo that we're in today will be a world we have to get used to, and we wouldn't expect it to get much worse from here, and perhaps with increased competition in the longer run, we will see consumers getting a better deal than they get today.
So we might all end up paying a little bit more for services like withdrawing cash, but the Banking Commission hope that this will save us the much bigger bill of another bailout.